Take stock of the global handover from last night. American markets seem to be coming to their senses a little bit, but who knows if it'll last. We saw a sharp crack in big tech. Now, why this is particularly surprising is because tech has been outperforming. Earnings have been great. Microsoft just reported 50 to 60% growth in its cloud computing, which no one anticipated. Tesla posted a fourth straight quarterly profit. So it's surprising that you're seeing such a sharp fall in these stocks. So particularly, Microsoft was down 4.3%, Amazon was down 3.6%, Netflix was down 2.5%. So the Nasdaq, as a result of all this, fell 2.2%. Tesla also fell around 5%, giving up the earlier day's gains. The S&P ended the 4-day winning streak, and the Dow also fell 350 points. Now, this was on the back of some weak unemployment data. Numbers came in worse than expected, so traders did not like that. Also, the US-China tension that's brewing seems to only be increasing. There doesn't seem to be any resolve between the two nations. So that's keeping everyone on their toes a little bit. Now, Europe, same thing. US-China tension, the markets don't like that. And the markets also don't like the unemployment data coming out of the United States. And they're ignoring that 750 billion euro stimulus that's been talked about recently. The stock 600 just about held in positive territory, and indices and stocks were all mixed up. So there was no clear trend visible in the European market. Coming down to Asia, again, US-China tensions are going to hit these markets as well. On Friday morning, they fell in early trade. Australia's S&P ASX actually tumbled 0.92%. Over there, you had financials and oil stocks really hurting. In Korea, the Kospi fell 0.5%. We don't have any data from Japan as Japanese markets were on a holiday, but they typically would mirror what's happening in the other indices. Coming down to our commodity check, which we always do, oil and gold, So oil fell 2%. Demand fears are now, you can't keep ignoring them. The US is just having a record surge in cases, and it's not stopping down at all. You have increased tension between US and China. China is one of the biggest oil consumers in the world. So the weaker dollar doesn't seem to be helping these crude prices. Brent futures fell around $1 or 2.3% to 43, and West Texas Intermediate fell around 2% to 41. So oil definitely feeling some demand fear there. Gold, on the converse side of things, really feeding off this same kind of fear. $1,900 an ounce is where we're reaching. Who thought we would have seen this number? What a run it's been. They're just shy of $1,900 an ounce. So that's just, boosted by, again, a weak dollar and then lots more stimulus talk coming. So people might have more funds available to buy gold. Jobless claims are rising, so people aren't going to work. So panicked investors or investors who are cautious, they're like, this market's rallying, but we can't understand why. All the macro data points like oil prices, unemployment data are horrible. So why should the market rally? We're going to buy gold and silver. So spot gold ended at $1,897 per ounce. That's its highest since 2011 in 10 years. And gold futures were up to $1,890. So gold looking unstoppable.